The next thing we're going to talk about is life insurance proceeds. This one is pretty clear cut when it comes to just a normal payment of life insurance. Somebody has passed away and you get a big check, that's tax free. That is simple, plain and simple. Uh, it's pretty good benefit because life insurance proceeds can be a significant amount of money, and it's just really helpful that it's tax free to some people. There are some other ways to get your to get your life insurance proceeds, and we're going to look at some of those right now. All right, so any life insurance you receive where you were the beneficiary of that life insurance policy is going to be tax-free to you. Uh, the person must have died, kind of self-explanatory, but as I just mentioned, there are some ways that people can get life insurance that don't require a death. If the person sells their life insurance, then the proceeds can be taxable. And we see this more commonly these days where somebody has a large life insurance settlement uh, or life insurance policy, and they have a terminal illness or something, so they might get their money up front. And that's what we're going to look at here, is where that could be taxable if you sell it. Let me start this over because this is just stupid. Let me look and see what the rest of these are. Okay, so like we mentioned, life insurance where that you've inherited. God dang it, Joe, get it right, will you? Okay, so the most typical way to get life insurance is somebody has passed away and you were the beneficiary of that in life insurance policy. And so that is going to be tax-free money to you. And this is a huge benefit because a lot of times life insurance proceeds are a large amount of money, and it's just a really big help for it not to be taxable to you. There is some caveats. The person has to have died. That kind of makes sense. But we'll see here in a minute, there are some other ways to get some life insurance where you don't have to die. If the person sells their life insurance, then the proceeds may be taxable. So you might have a policy that's a pretty big policy, and you might sell that policy to somebody else so that they'll be the beneficiary, and those proceeds will be taxable to you if you sell it. And so in this case, you haven't passed away, but you've made some money from selling your life insurance policy. There are a couple of other ways to get some tax-free life insurance money. For example, if a person has been diagnosed with a terminal illness, they can go ahead and collect their life insurance and it'll be tax-free to them. And I believe the rule is they've got to be considered terminal and expected not to live more than 24 months. You can also get it if you become severely disabled to where you cannot continue on living a normal life without significant assistance. And in that case, there are some ways to get your life insurance proceeds back to you tax-free. But if you just sell your life insurance to somebody else and they give you money for it, then you're going to have to pay tax on it. This is one of the few examples of where something's not taxable just because it would look really bad to the IRS to make it taxable. I mean, can you imagine a little spouse dying and their other spouse gets $100,000 and then the IRS comes knocking on the door saying, hey, we want $30,000 of that. Believe it or not, death is one of the great tax breaks in the tax code, provided you're not the one who died, of course. So to the survivors, death comes with some great tax benefits. Another thing to look at is interest you earn. A lot of times life insurance will pay out and you have the option. You can take a lump sum, give me the $500,000 right now, or you can take it out over payments. You know, give me $5,000 a month for however many months it takes. And in that case, you'll earn some interest on it. So the life insurance proceeds would not be taxable, but any interest you earned would be taxable.